Hello, guys. I hope you guys are doing great. So, as I said on the Telegram page, if you haven't joined the page, kindly join my page on Telegram. That is MedFS Academy, and I'll be dating you guys on trade setups, news, you know, certain forums that you can join and then take advantage of the technology that we are in. So, as I said, I'll be dropping a video on BTC chart and gold. So, precisely, Bitcoin has been rallying within the price of 90, 80, in between. And then this is due to the festive season that we are in, because during this particular time, most of the investors have made their profit already. So there's no time for them to be active trading on the market or investing a lot in the market. Probably the market will be really active coming next year, somewhere in January, February, thereabout. Right, but as of now, it is not advisable to be active trading or to have an active trade as of now. That is why I've shared on the page that I'm focusing more on chart review analysis that is preparing into the next year. So let's get back to the chart, right? As I said, BTC. Okay, so there was one thing that I find it very challenging, I think, for the past 3 months, regards to price entry, right? So previously I was a swing trader, right? I was following Kojoforex style. I hope you guys know Kojoforex. Yeah, kindly check his page. He's one of the renowned, yeah, let me say renowned, right, traders that we have in Africa, specifically here in Ghana. But then he doesn't be here, right? I was following his style, that is swing trading, and which is more profitable in the long term. But I realized that in the year 2023, the style was not really working. So I had in mind that I have to change the strategy, right? And then I adopted the day trading strategy. Now, transition from swinging to day, and for me to transition from day to swing trading again became a really headache for me as to how to enter a price, how to enter a trade, right? Specifically, trade entries. It became very difficult, though I was making some progress, but then it was not that massive, right? And so I decided to take a break, refresh, and then have a proper review of the chart. And then one day I realized that no, I'm trying to adopt swing trading method for day trading, which will not work because swing trading, it requires more patience, right? Compared to day trading. And then day trading, all that you have to do is that you follow the time session. I hope you guys, I've taught you guys the time session. That is the New York, the London, the Tokyo, and then yeah, these are the time session that we trade. So for you to be able to catch the pips or make that massive return that you are looking for, you should be always trading during this time session. And funny enough, I know this, but then I have not been following this principle. Do you know how discipline is? I know this principle, but I was not following because I was just following the knowledge, which I realized that no, it was not helping me until I realized that no, I have to come back and then follow all the principles that I have stated for myself, right? So let me break the chart down. You guys will understand better, right? Okay. So this chart is Bitcoin, right? You can see BTC, BTC USD. Trying to hide, keep the drawings away. Okay, I think this future. Right? right? Oh, all right. I think this future. Yes, yes. So this is BTC. So let's start from. So whenever you want to take a trade, you have to start from the higher time frame to the lower time frame. That is top down analysis. So we will start from the daily time frame, right? And what do you see from the daily time frame? From this zone to this zone, right? It was a bullish trend. Bitcoin was rallying to the top, right? Until we got to the price, until we got to this price, 124,000, and then price started rejecting. You can see double top here, which is a major sign that price want to reverse, right? So price started reversing from this zone, and we started having a series of lower low, lower high, lower low, lower high, lower low, lower high. So our focus now is on this trend, the current price action, right? We are not focusing on what has happened. We're focused on what is happening, right, within a particular time. But we will not take our trade on the daily time frame, right? So we have to scale down to the lower time frame. So here we will go on the 4 hour time frame. So when you come on the 4 hour time frame, you can see the chart clearly, right? You can see it clearly from here. Right here that we started having the rejections. We have we have this low, lower high, lower low, lower high, right? Lower low. These are inner structures, but then they are significant. Lower low, lower high, lower low, lower high, right? Exactly. So on the 4 hour, if you're a swing trader, this is where you have to focus mainly on the 4 hour. This was the trick. You have to focus mainly on the 4 hour until you find the corresponding candles or patterns that will give you the opportunity to take advantage of the selling momentum, right? But then if you try to go on the lower time frame, that is 15, 30 minutes, you realize that you will be seeing a different pattern or a different trend. That is this minor trend that we are having here, this bullish. That is low high, lower low, lower high, lower low, lower high. No, yes, a lower low, higher high, higher low, higher high, higher low, higher high, higher low. This minor one. But when you go on the forward away, it is a correcting pattern, right? I hope you guys remember this, right? This thing, something like this. Then price will correct to come down, then to correct itself, then come. Yes. But then when you go on the lower time frame, you see it to be something to be bullish, but which is not. So for you to be able to take advantage, you have to wait patiently. And this is how I was able to cut the trade on Bitcoin, right? So this lower high, lower low, lower high, lower low, you start to mark your zones, right? You start to mark your zones. Let me take this one so that I'll show you. Mhm. You start to mark your zones, right? And then I mark my zone, right? This is a zone. A zone simply refers to what? An order block or a level in which you are anticipating price to come and then react, right? So price almost got to this place, but then it did not touch. So we had our first touch. So let me put this one here. So here you have to be very patient. It's a game of patience, right? For swing traders, you have to be very patient. So price dropped and it pushed back to that zone again. So this is when you have to be active, right? So every 4 hour you have to come back to the chart and check what are you seeing, what is price doing at your particular zone. So when I came and then I saw first rejection, this is a tweezer, right? The bearish candle adjacent to the green candles, a tweezer, we call them tweezer. Price drop a little bit, and I saw this massive rejection candle, this bearish, more of like an inverted hammer. If you know inverted hammer, you know. So this is a strong candle rejection, which indicate that price is no more longer interested going up, rather dropping. So what do I do? I missed this. I missed this. Can you imagine? Almost like 300 uh 120 pips or so. I missed it, right? Here you have to be really patient, right? You don't rush. So I missed it and I was still patient to see whether I can get an entry. And God being so good, price came back to this zone, right? As a form of what? Correcting itself. And on this particular zone, let's go on the 1 hour time frame so that you can see it clearly, right? So on the 1 hour time frame, you realize that I've put in some line here, right? Price started reacting on that particular zone, right? Which is a resistance level. So we sell from resistance, then we buy from what? Support level, right? So I was patient, waiting to see what price will do at this zone. And this is our trend line. If you know how to use trend line, go and check. Or if you don't know how to use trend line, go and check my previous video. I've taught on how to use trend line. So trend line, at least we need to have two touch to confirm it is a valid trend line. We have our first touch, second touch. So this was our third touch. And this particular zone that I've marked, right, reacting to price, align with the trend line, we call it conjunction. And thanks be to habbyforex, right? I'm grateful for his teachings and knowledge that he has imparted in so many. So this level is a conjunction, and then you could see that clearly price was reacting at this zone. Fortunately, I think it was around Friday or so, last week Friday. I came to the market and I realized that no, this is that opportunity that I'm looking for. And guys, I went to the 15-minute time frame and you could see this this I think it's called morning star, so morning star, I guess. And I quickly jump in at this level and put my stop loss exactly above it. That is how we set appropriate stop loss. Right, this is a perfect entry, guys. Within 3 minutes, I had this massive drop, almost like making like 300 Ghana cedis or so. I think I was trading my Ghana cedis account, right? 300 Ghana cedis on this, and I closed this trade. I closed because the week has already ended, so there's no need for me to hold. I knew that price I knew that price will come to this zone first, then this zone second. But then because that particular day was Friday and then the week was coming to an end, there's no need to hold the trade. You have to close it and then anticipate good trade in the next coming week, right? So can you imagine? I think this was Saturday. Yeah, that was yesterday, and I decided to check the market. You know, Bitcoin, it doesn't close when the market close. Bitcoin trade from Monday to Sunday, right? That's crazy. I marked this zone, right? I marked this zone here, right? Don't forget that this zone is more of like a double top, and price broke above it. Probably when this happened, we anticipate a retest for a continuation of the bullish. But then, because the overall trend of the market was bearish, there's no need for us to have a retest and continue the bullish, right? Yes. So price started reacting at that particular zone, right? I saw it, but then I was not anticipated because I was not seeing a clear candle. But then if you go on the 4 hour time frame, at least you need to have like four candles as a confirmation. So this was our first touch, first candle, second, third, fourth, right? And this fourth candle was not showing any. So this candle, right? I could have jumped in from here to cut this way, but then I decided to set this trade to see how it will play out. And guys, it played out exactly, but I did not take this trade. But then I caught this one, the first one, right? Yes. So you see, price has come to the area I was anticipating. So guys, this is a simple trade setup that you can follow. Let me go to be gold. You see, gold has been very stubborn, and gold is one of the very pairs that is very volatile. But then, if you know how to trade, guys, you make crazy money. You make crazy profit from it. And I've been patient selling gold, and I've come to realize that gold does not really follow most of the levels that we anticipate, but then it will respect other blocks. So what do I mean by other block? So other block simply refers to the previous low price moved from. So these are low, price got to this, mostly gold like to come to this particular zone or within this zone, then continue going up, right? It will do something like this, then it will come and respect this zone somewhere here, then it will rally up, right? Exactly. But then the normal structure that we know or we follow mostly is when price goes up, comes down a little bit like this, goes up, and respecting the 50% level, and then uh, the 0.71 and then 61 level, right? If you know how to use the Fibonacci, right? But then gold mostly respect other blocks, right? These zones, you respect other blocks a lot, and I will show you a practical example, right, on this chart, right? Now there's something I want to share with you. So we have something called economical data, right, which really influence the market. So last week Thursday, the US economy decided to release their Fed interest rate, right, by cutting it by I think 0.25 bps, right? I think I have the data here. Let me show you. I have the data here. I have the data here, right? So the previous data, that is federal funds rate, that is more of like an interest rate, right? Whenever a country's interest rate is high, mostly investors are ready to invest in the economy, and employment rate begins to increase. There will not be food insecurity and other stuffs. But then when there is high inflation, we have something called fiscal policy, and one of the tools is cutting down what interest rate. And then when economy or a country decides to cut down its interest rate, what happens is that it weakens the currency for a very short period of time, right? If the country is not able to what come back or bounce back, then it's going to take a long period for them to. But then mostly, it's a strategy that is used to what, to stabilize economy price movement. So previously we had 4.0, and then the forecast was 3.75, and then the actual is 3.75, right? And I explained, if you go to my chart, you see it, right? Now we have to compare the actual to the previous. So it is lower than the previous, meaning that there is a bad news, and this particular news also aligns with Donald Trump, that is the president. He also released a particular program relating to gold, right? And that is a gold initiative for investors who are ready to have permanent residence in the United States. All that you have to do is pay $1 million and you are good to go. And you see, these are both, oh, we are having negative news, but then we had a positive news to counter it, right? And this caused gold to rally from all this particular zone. Guys, can you imagine, from all this particular zone, right? From here to this place, guys, I had the opportunity. I even I had the opportunity, I entered this trade, but because gold respect zones and I was trading with little capital for the moment, it took me out, right? I think my entry was around this zone. No, I entered this zone, this level, and my stop loss, guys. Could you imagine? I know that my stop loss has to be here, right? Was a little bit above it, beneath the recent low, right? Or probably somewhere here. But then because gold is very volatile, I cannot afford it. So, and then I was also trading at the wrong time. That is one of the major challenge. If I had waited for New York session, I would have been able to take advantage of the market. But because I didn't wait, I took the trade during London session. You know that manipulation, right? So I think my stop loss was exactly somewhere here, right? I entered the trade somewhere here. It went up a little bit, like 10, almost like 100 pips, 90 pips. Yes, 90 pips, and it drops back. Oh, Charlie, hit my stop. After hitting my stop loss, and we entered into the New York session, price moved all the way to this top.